Cool, we should be good now. All right, what's up, everybody? How's it going? Um, Welcome to another class. This is probably going to be the start to a series that I want to do with you guys into these concepts, how I trade, how I look at charts, and hopefully give you guys a better understanding of trading and analyzing these charts and candlesticks when going to make a profit. So I'm going to go ahead and delete all of this actually real quick. Let's get rid of all of this so we can get a clear view of what we're looking at and what we're going to get started with. The first thing I want to kind of start with you guys and let you know about is my beliefs on smart money, how it can be confusing, how we can see all these different definitions everywhere when we're trying to learn these concepts, right? And we don't know exactly what to follow, what model to follow, how to exactly trade the model and how to make it make sense to ourselves. And so what I'm going to try to do today is help you guys out with that, based off of my understanding of smart money concepts and what I have learned and how I trade. So as I was saying before, there's many definitions, many models, and as well as many teachers that will explain many of what I believe to be similar models as different concepts. So they'll use different definitions or say this is their model. I've been teaching it this way for 10 years. When you see the same thing with someone else calling it something else. So an example of this can be fair value gaps, imbalances, displacement candles. It's all really the same thing that we're looking for when we're trying to trade these general concepts. So applying all of these different models can be confusing, as we talked about. What I believe smart money is to me is a general belief and a knowing that there are larger forces in play affecting the price of a certain asset, meaning there is larger money in play manipulating the price of a certain asset to move to certain locations, to liquidate traders, to make money, therefore balancing the market, as well as the belief that there is a balance within the market. So there needs to be the equal amount of buyers for sellers. Doesn't have to be at the same time. What this means is that eventually there will be an equal amount, a balance within the market. But knowing and also understanding that because there is this larger manipulation and this money in play, right, we can use this to our advantage as retail traders, because we're all retail traders unless we have a friend in a hedge fund or we're in a hedge fund ourselves, trading financial money or institutional money. We're not knowing what a price is going to do, what happened or before the price moves, right? We don't know. We don't know what's going to happen before a price moves. If you believe you do, then you are completely wrong. Unless you're in a hedge fund, that's just how it is. Allowing yourself to put yourself into a perspective of an institutional trader or a hedge fund trader or a higher hierarchy against liquidity and smaller traders within this market will allow us to notice footprints and clues that will show us how we can be able to profit in this market as a retail trader. So how can we do this? We're going to need to build a structured plan with steps to allow logical trades as well as maximum profitability. And what this means is we want to decrease our risk and increase our reward. And that's what these algorithms and institutions are doing, right? So if we want to mimic that, we need to first get in their perspective, and then second, enter how they enter, right? We're not going to enter exactly when they enter. We do not know when they enter, but we can see footprints and clues when they are starting to get in, right? So I'm going to go over some main things I look for. I'm going to talk about confluence versus confirmation. And then I'm going to go over a little bit about ETH's range, how we can analyze kind of each candlestick in each of these smaller market structures and higher time frame market structures to be able to take logical trades within these ranges, even when we're chopping like this, right? What's it been, a couple months, weeks that we've been in this chop, right? And a lot of traders can get frustrated because they're like, well, we're not getting a lot of trades, right? My certain model that I've been using within trends isn't working right. What do I do, right? I've been getting really frustrated because my account hasn't been growing like I need it to be growing. I thought it's been good, right? Because of this certain model that I've been using. Well, as smart money traders, the purpose is to be able to adapt to the flow of the market and how price is going to be moving to be able to maximize profitability, right? So, main things I look for, and what I'm going to start off with is market structure. And market structure is king. We'll go over a little reiteration of the basics of it, and then we'll go a little bit more in depth today, and then later studies will go into deeper internal structure as well as external structure and how we can use that to our advantage. So what I'm going to talk about first is just our basic lower highs, lower lows, higher highs, and higher lows. Uptrend right here, downtrend right here. Lower high, and then we have our lower low. If we go over to the other side, we have our higher low here. If any of you guys have questions as I'm going through this, feel free to ask. Don't go ahead and interrupt me, and I will not be mad or anything like that. It'll be all good. We can get those questions answered as we're getting this done. Higher high right here, and then we have a higher low. Right, so why I always preach that market structure is king, and why I believe market structure is king, right, is because it's going to create these ranges of liquidity where retail traders are going to be fighting back and forth, right, based off of their belief of direction. But market structure can be confusing based off of all these candles, right? We can get what's called analysis paralysis and start to misunderstand what we're actually looking at, which is what we don't want, right? We don't want to be confused every time we look at charts. We want to look at them with clarity and understand what's actually happening within all of this movement. And that's why when you're first taught trading, you were taught by probably Playboy or anyone else to start on the higher time frames, right? Because you have less candlesticks, less noise, less to look at. Therefore, you can analyze greater. So we're going to take those concepts and apply them now with a smart money type of look, right? So if we're going to be looking at market structure, how I'm going to be marking it and how I'm going to start when I always mark my market structure is going to be from higher time frames to lower time frames. Why? Because we need to keep our higher time frame bias in mind always. It is going to trump our lower time frames. If we get a lower time frame break of structure to the upside, there's no confirmation to long if our higher time frame is in a downtrend. It could either be a counter trend or it could be a liquidation right to the upside. Retail traders get stopped out, and then you're immediately stopped out of your trade, and you're like, what happened? I thought it was bouncing off of my zone, right? So I speak of market structure. I speak of supply and demand. I speak of institutional candles, and what institutional candles are to me, and my definition that I believe them to be, is candles that manipulate traders into going a certain way or believing price is going to move a certain way, and then you see an immediate bearish and or bullish engulfing candle following that break structure and leaves a large displacement, right? So we can look at areas like this or areas like this where liquidity was taken to the upside, right? And then an immediate bearish engulfing candle followed. So those are what I deem institutional candles. Manipulation candles. You can call them scam wicks, whatever you believe. And then I'm going to be looking at premium and discount ranges. What premium and discount ranges are is I just use the 0.5 fib. Sometimes I'll have the 1, and let's just make this easier to see. But I'll have the 0 and the 1 for our range. What the basic understanding of how I use Fibonacci for this is, as a larger institution, or if you have a lot of money, right, and you want to make the most profit possible, if you're buying a house, right, do you want to buy an expensive house, right? No, you don't want to buy an expensive house. You want to buy a cheap house, right, and then flip it into an expensive house and then sell it like that. So what does that mean? You want to buy a discount house, right, versus buying a premium house. In this theory, if we can combine market structure and this theory, what this means is if we are in an uptrend in a scenario, right, we are in a range, right? We're in an uptrend. We're following market structure. There's a demand zone down here. We're looking to bid. We're waiting for market structure to follow. For a long bias, right? Do we want to be buying in premium, or do we be buying in discount, right? We want cheaper prices. So we're going to be buying in discount, combining this with market structure. So we have a higher high. We're looking for a higher low. We're looking for our lower time frames to confirm the higher low. Lower time frames confirm. We look for a lower time frame order block. Take it up to now the week high in the uptrend, right? Buying in discount, and that's how we can pair that. The opposite is going to go for a short scenario, right? So if we're in a downtrend, we're going to want to be looking to sell in premium versus selling in discount, because now my R&R, right, my risk to reward is extremely significantly increased if I'm trying to take a short position down here with stops above here, right, or take a short position up here with stops above a zone or a high up here, right? Same exact scenario. For targeting, let's say there's a low down here, right? And now 3-to-1 R&R, or sorry, a now not even 1-to-1 R&R becomes a 3-to-1 R&R, and that's how we can minimize our risk, right? And I'll also show you how to combine our lower time frames, order blocks, and different strategies that we look for to maximize our profitability. So this is just a basic understanding of why we want to right, sell in premium, buy in discount. And as market structure and supply and demand traders, we want to be shorting the lower high and buying the higher low, right? Shorting lower high and buying the higher low. So I'm never looking to buy a higher high or buy in this range, right? I could play lower time frame scalps if I'm playing on lower time frames, but I'm not looking to play the higher time frame trend up here until I get that pullback after a break of structure to indicate that now my trend has shifted and now I can take a trade a different way. Let's get rid of these now. So we talked about our structure. We talked about our institutional candles. We talked about our premium zone ranges. And now we'll talk about a little bit of supply and demand. So supply and demand is going to be basically your selling and your buying, to put it in the simplest terms possible. And that's what I believe will be best when studying these concepts and trying to learn these concepts, is to simplify it for yourself and to make it logically clear to yourself what you are doing and what the market is doing as it's moving, right? So if we're talking supply and demand, supply is basically going to be your sellers, and demand is going to be your buyers. So how can we look for supply and demand? We're going to be looking for a consolidation right before a large move. So something that I want to iterate as well is supply and demand is going to be different from order blocks, and I'll show you guys what this means in a second. But basically, if we're looking on our higher time frames here, right, and we're looking for our large moves, we're going to be looking for our areas of demand and our areas of supply. So we can see a large move here, right? Large expansion to the upside. this was demand is in control here, right? Bullish trend moving to the upside. We're going to look for an area consolidation at the bottom of that move, right? This is going to be major discount, right? Where we're going to want to buy price if it comes back down. So we have our area of consolidation before that impulsive move to the upside. Now this is going to be our entire area of demand, right? Now we're going to pair this with our market structure and our order blocks to get that maximum profitability, right? Because look at this here, we're not going to be looking to buy as the impatient trader would, right? Set limits here, stop losses 30% right below these lows, take it to these highs, right? They're holding for months to catch a 3-to-1. Realistically, to catch a 3-to-1, right? They could be holding for years in this trade to catch a 3-to-1. What happens? They get stopped out here, or they could possibly get stopped out here, right? And then price goes their way, or price ends up going their way, but now they're in months, right? Days in drawdown, which is not what we want to be in when we're taking our trades, right? Because what is that just inducing? That's just inducing stress. We see 2 moves away, but we're not catching a 3-to-1 until we're all the way up here. So now I'm technically risking as much as I could make at this part, right? Which is, I believe, yeah, roughly a 1.5 to 1. So you're risking roughly as much as you could make on just this upside move. So now I'm going to be showing you how to find your order blocks, right? So we have our demand, and now I'm going to be looking for institutional candles, right? Like I was saying, for the sell side, it's going to be your buy before sell candle. So it's going to be your up before down candle, right? Your up before large displacement down side, up candle before large displacement downside right here. See large move following, breaks multiple structure points. And for the following, or the opposite, sorry, you're going to want the down before up candle. So you're going to see a liquidation raid usually to the downside following a large bullish engulfing candle to the upside. So in this case, my institutional candle would be down here, right? We can see now an imbalance left behind from this bullish engulfing upside. If I now take away this box, kind of refine this zone for you guys now. We can see our imbalances here, right? Left behind right here, as well as our last down before up candle. If we're looking at our daily structure in this case, if we go to our lower time frames, right? If we're looking at our market structure, if I'm marking my highs and my lows in this scenario, I'm marking just the large moves, right? The extreme high to the extreme low. And you can see these smaller areas of redistribution, right? These drop-based drops. So we can assume this as an area of supply that was broken. So we can assume that there is a ton of amount of demand right here, right? That broke structure to the upside. This one move broke multiple highs right here. We could call these lower time frame highs right here. Break a structure right here. Break a structure right here. And ultimately our break of structure up here of our larger swing, right? If we're looking at it like this. So this move here caused that we showed our institutional candle that was right here, right? This entire zone. So we could possibly look for buys if it comes into that zone. I'm marking my institutional candles following my market structure. So I find my market structure, I mark the breaks of structure, and then I look for the institutional candles that sponsored that move. If I'm going to be looking for, so if I see a break of structure to the downside, right, I'm going to be looking for institutional candles that sponsored a move to the upside before the downside candle, right? If they already look filled, meaning if they already look mitigated, I will look for lower ones. And vice versa goes for demand zones. So we have our imbalances here, right? And we have our institutional candle, as well as our market structure. But something I will iterate here is just because it's coming into this institutional candle that caused this large move all the way to all-time highs, doesn't mean we're buying here. Why that's still not enough confirmation. We still need to pair it with more to be able to take this confirmed trade, right? So we have all of this played out, but you can see how these concepts can get really frustrating because we can do all this technical analysis, but price can come all the way down into our zone. And because of all of this bearish structure, we wick the zone and now take out the zone, right? If we had limits on this zone, we wick the zone, end up taking our trades out. If we were managing these properly, we probably would have had BE stops right here, right? Been taken out around the 26th of May. But you can see how this can be frustrating because your entire analysis that you've done, right? Let's say you did this months ago and you waited for this trade since March. Price comes all the way down in, taps into it, you get in a trade. Price goes 15% in profit. You make some pretty good profits, right? That's not bad at all. Not bad at all, especially on leverage, especially with what these crypto exchanges allow you. But you get some pretty good profit, set your stops to break even, take profit, but you're looking for these areas up here, right? You're looking for this high to be taken and you're looking for this high to be taken. So your trade is looking something like this. Right, sumps underneath the low. Targeting the high. Something I will iterate to is that I just showed you guys how we set it on top of the demand zone versus how we set it here. We achieved, or this would be a 22 to 1. Something that I will let you know too is that, look, now we pretty much got our 3 to 1 that we were looking for with this entire move that we could have held for months, just based off of this institutional candle that we found after the demand zone. Yes, roughly a 2 to 1. So we got a 2 to 1, whereas we got the 1 to 1 with the other demand zone on this move right here, right? This 40% move versus a 15% move, and we achieved more profitability within this small move versus this move. This is how we can, or how you can start to see that all of these trades and all of these candles and all of these setups that occur daily can allow you the profits that you guys see on Twitter and all of these crazy accounts getting not blown up, but just going crazy within a couple months because we can maximize our profitability and lower our risk. But as I was talking about before, right, price taps into our institutional candle. We're still looking for a break of structure to the upside. I would not call this a high here. Price comes up, starts to create highs and lows. We can start to see that liquidity is created here. What am I talking about? I'm talking about these equal highs. So we have traders that are in shorts, right, putting their stops over these highs. This is a 4-hour chart, so we can know that higher time frame charts hold larger money, right? Because we can have our retail whales as well, right? Our people with a bunch of money that don't know what they're doing, right? You guys see it everywhere. KSI is just prime example. That are trying to trade with large amounts of money, and they're setting their stop losses over highs or lows that they believe are protected just based off of recent price action. But we can see that liquidity being created, and this is where I will show you that trend change and how we can not get fooled into taking buys off of this institutional candle and all of this previous price action. But we have our liquidity here, price stops in, right? We're still looking for that continuation now. So we want, in this scenario, for a confirmed trend, this high broken here on higher time frames. Or if we're looking to play up to this high, we want to see the creation of a new high followed by a new low and another new high, which is something that I want to see for higher time frames when we see these large swing moves like this, due to the fact that price is still technically bearish until over this, right? We could come up to here, completely die right here, come up to here, completely die right here. It's all based on what balance needs to be filled within that time, right? So price taps into our zone, comes up, creates liquidity, right? We can see these lower time frame fractal zones of demand created. Right, so we have our demand zones here, consolidation before our expansion. If we would be looking to take this to the upside, we would take our trade here following market structure, right, if it proceeds. So something I will show you here, and in this bullish scenario, right, on lower time frames, so this is the hourly now. If I'm showing you the market structure, I'm looking at it like this. Right, so in this scenario, if we're specifically playing market structure and how we can play it to our objective, right, we find our demand zone, we wait for price taps into our demand zone, and now we wait for that following confirmation. What does this mean? We wait for the break of structure to the upside, so now we're on lower time frames, right? This is the hourly. We get our hourly break of structure to the upside here, right, with this high that takes out these, this high right here that sponsored a new low. If I'm drawing it out, it'll look like this. Break a structure to the upside here. Now I'm looking at this internal move right here, right? Looking for a demand zone in here, possibly to trade off of after this move. Upside, I can now go on lower time frames to refine this, right? If I go on lower time frames and look at this, I can see this demand zone as possibly a zone to buy, right? This imbalance, this sell before buy candle after this large break of structure to the upside. If I'm trying to play internally, right, intraday, I see this break of structure to the upside. I'm now looking for the higher low to confirm. Consolidation before the expansion. So fractal accumulation here, fractal reaccumulation here on lower time frames. So a demand zone was created here, a demand zone was created here. If I now go even lower, how I trade this is the candle before the candle that broke structure to the upside, or the buy before sell candle if I'm playing limits, right? I don't play limits a lot, so you'll see me mark alerts at those buy before sell candles, at those institutional candles, and play market structure following, due to the fact that I can maximize profitability for myself with order blocks. So what this means is, right, I see this zone of imbalance, right? I see this sell side liquidity created right here. So on lower time frames, we have early longs in trades underneath, with stops underneath these lows here, possibly stops underneath these lows here. Right, trying to get in trades, trying to get in longs. So I can start to see that uptrend start to be created, impulsive move, demand creation, order block creation, right? This impulsive move broke this high here, as well as a strong high that caused a new low, right? So now I'm looking for the order block within that. I see this imbalance, and then I see the following order block. So if I wanted to play limits in this scenario, now that I have all of this following confirmation, right, hourly break of structure to the upside, hourly higher low. After the hourly break of structure to the upside again, right? I have a 15-minute now confirmation, and this is what I'm going to show you, okay? And this is how I go to analyze and how I'm saying I line it all up. So I'm going to keep going, right? And what this means is now that this high has been breached right here, right? I'm looking now in this zone for a possible order block or imbalance to take my trade off of. So I look for the break of structure in this scenario, right? This is where we receive our break of structure on the 15-minute. This high was breached. Looking for the impulsive move, right? The imbalance that caused it. I can see this zone as consolidation. So this is my demand zone. If I wanted to refine that demand zone, I will show you how to do that right now on lower time frames. Now from the 15-minute, I'm going to go to the 5-minute. See if we can get over there. Okay, so now we can kind of see where that market structure can kind of get lower and lower and start to see our change in trend, right? So now that I'm looking for my order block within this trend, I'm looking for my displacement candle, right? My candle that says it wants to go this way. Like it's telling me it's the elephant that jumps in the water, that it's the elephant in the room. Everyone's like, it's there. Like it's going this way, right? This is the candle that we want to look for. In this case, it's going to be this candle, right? This displacement candle left a fair value gap, left an imbalance, left whatever you want to call it, based off of how we do it. That caused a move that broke structure to the upside. I'm going to be looking for possible zone of demand within that. We can see a zone of reaccumulation right here that broke a supply zone. So I know this zone as a demand zone. I'm doing the candle before that displacement candle. And now I'm taking a long position. You can take it on the top of here. You can take it on the 50% or wherever you want to trade your order blocks. Take a trade, end up looking like this. Stop loss below the demand zone and or below this low here. Below the demand zone would look like this, 0.19% stops, and now you can target the hourly high. Right, that liquidity that was created. And now I'm trading still an hourly chart, right? I'm still trading hourly structure, but I'm using the lower time frames to now confirm with demand zones with order blocks in this long bias scenario, even though our higher time frame even though our higher time frame trend is very bearish, right? It's very, very, very bearish. Even though it's bearish, I can still catch these longs, these 32-to-1 R&R longs, right? Within these lower time frame trends, just based off of market structure, and then adding these extra confluences and confirmations as well, right? So we can see we had a break here, pullback, another break upside. We're looking for our strong high to be broken. Strong high is broken. We're looking for now another higher low to confirm that. So how I do it is I go down from the 4-hour to the 1-hour to the 15-minute to the 5-minute, and then I'm going to be looking at my 3, 2, 1, and then sometimes the seconds for entries. I haven't been using the seconds for real use money entries per se yet. I would just say they've all been paper trades, not something that I've been wanting to stress myself out with these smaller stop losses yet, but it is something I will definitely get into. As I've always said, and as something I will say, these assets with larger money are going to be the ones that you're going to want to trade to enter on these lower time frames like this, like the 5, 4, 3, 2, 1 and below, due to the fact that larger money is going to be in it because we're trading manipulation concepts, right? There's going to be more manipulation within an asset that has more money in it, right? That's just logically how it's going to work. So as I was showing you, that's why you'll only see me trading ETH and Bitcoin. But as I was showing you, we can catch these now 32 to 1s with a 0.19% stop loss, right? On a 6% move versus a 32% move catching a 3 to 1, right? Not even a 3 to 1, right? A 32% move catching a 0.89 to 1 versus a 6% move catching a 32 to 1, using market structure, confirmation, and different biases like that. So we're going to get into how I kind of studied this range and what I'm looking for next. And then I'm going to have you guys ask some questions, and I'm going to iterate the importance of time as well. So let me go ahead and get all of this out of here. And then we'll talk about the analyzation of this range and where we kind of saw that market structure shift, right? So we saw the longs that I kind of just went over, how we took that to the upside, right? How we were able to target that liquidity to the upside based off of market structure being bullish, as well as our bias of that liquidity, those equal highs to the upside following an unmitigated supply zone from fractal supply within this wick on lower time frames. Now this is where we're going to start to see the supply introduction. This is where a lot of traders, smart money traders, can get faked out of trades, and this is where a lot of retail is faked out in this certain scheme, right? So what we were seeing here and what I talked about in MPIX a while ago is the introduction of demand or supply, and what that means is so when you guys use trend lines, or anybody uses trend lines, right, what that is basically liquidity. What this means is there are traders, right, trading a wedge, right? Price is moving up and down within the wedge, everything is going good, right? Yep, they're getting in shorts, right, at the top of the wedge, and they're getting in long positions at the bottom of the wedge, right? So now that most of the general public uses these patterns, we can start to see the buildup of liquidity, right? And we can start to see these patterns start to play out. And we can start to see these patterns manipulated as well. And that's why you'll see me post these bull flags and bear flags in these ranges that get absolutely destroyed. You just see moves up and down throughout the entire range, and retail is like, what's going on? 1 minute they're calling 10K, the next minute they're calling 100K. They have no idea what's happening. Whereas we're just sitting back waiting for market structure to do its thing, right? So as I was saying before, right, they're trading these wedges, they're trading these patterns, and they're setting their stop losses underneath either the wedge, underneath lows that were sponsored at the wedge, highs that were sponsored at this wedge here. And what this doing is this is building up liquidity, a bunch of stop losses, right, underneath all of these lows. So because the most general public uses these patterns, that's why you see these patterns the most manipulated. So that's just something to note. But you'll start to see that buildup of liquidity, right? Equal highs, equal lows at those ranges. And then you won't start to see that move, right? That big move until that liquidity raid, market structure break, introduction of supply due to the liquidity raid, and then continuation. Introduction of demand due to the liquidity raid. But why are we introducing demand now? This is taking out, so I was talking to Hoochie about this, but this is taking out the old money and putting it in with the new money. So it's taking out old demand, putting it in with new demand. So that's just kind of how I simplified it for myself to be able to take these trades and understand it when I'm looking at these charts. If it's still confusing, go ahead and let me know. I'll try to give you guys a better explanation. But That's just basically how I look at it, right? Out with the old, in with the new. So we're taking out the old money, we're introducing a new demand for a new trend, right? So the new move and the big move can finally happen. Algorithms and institutions can enter once the liquidity is purged, right? And positions are filled, and now they move price. And trend is either reversed or continued. Exactly. They're scooping up as much money as possible so they can have as much money in their position to make as much money as they can before they move the price. That's it. So in this scenario, what I was showing you guys with this certain liquidity raid, an introduction theory that we were talking about is in this scenario, right, we have these equal highs created. Now these equal highs are purged. What's following, and what was I talking about before when we were talking about liquidity raids, right? We see that buy candle before that following bearish engulfing candle in this scenario. That breaks internal structure to the downside. So buy candle before sell candle. This is our institutional candle that we're looking at, right? I'm looking at this as an introduction of supply because I see this this large move as an introduction of supply, right? You can see here when we're just analyzing candlesticks and analyzing these charts, how this demand, right, and even this supply in these scenarios looks lethargic, right? Candles are moving, they're taking forever to get up and down. And then we see displacement, 2 candles, right? In 8 hours, price moves roughly 7%, right? In 8 hours, price moves 7% versus 7% following. Let's just do this over here to make this easier. Right, in 4, 8, 12, 16, 24, 28, 32, right? We could keep going. Lethargic price action here, down. High moves up, right? Quick moves up. So this is what I was talking about, where this is going to fool the new smart money trader or the market structure trader who is trying to trade market structure, because in this scenario, you're looking at this as higher low, higher high, right? You see this closure over these highs, you're like, yes, I'm going to look to take this higher low to the supply zone and then see what happens from there, right? But this is where a lot of traders are faked out, right? Because we see that buildup of liquidity right before this fractal supply zone. I'm going to show you guys this supply zone in a second. It's not super important because I'm not even entering any positions off of these supply zones, right? I'm going to be entering positions after that confirmation on this institutional candle over here. So we have our liquidity. Let me go ahead and mark this out for you. Let's go to our lower time frames now and show you guys what's actually happening now. We see that impulsive move upside, right? We caught our longs, right? Took our longs up to these highs, took profits, right? And now we're looking for sell positions. Now that we once market structure shows, right, now we're going to be looking for sell positions to possibly take counter trend sell positions to the downside, and then counter trend internal sell positions to the downside, and then following pro trend longs to the upside, right, internally versus taking shorts. But in this scenario, and the reason why we're looking to take shorts, right, is because we see our liquidation, right, of those highs that were taken out, right, these shorts that were in positions, right, now the introduction of supply following the break of structure. So if you see a liquidation rate without a break of structure, I'm not looking to take any trades. That's not where I'm going to be looking to take any trades. I didn't see the liquidation rate, the displacement, the break of structure, the candlesticks that showed me, yes, market's moving this way. Market's going down, right? Market's going up. In this scenario, you can see market's going down, right? Versus these candles that take forever and are super, super lethargic. And that's how we can kind of look at price action to just give us a general bias of where price wants to move, right? If it's moving faster in one direction, that's how we can get that general confluence of a possible trend, right? We're going to need all these other confirmations, but that's just a general confluence. So we have our liquidation rate, introduction of supply now with these breaker structures to the downside. I can look for possible institutional candles to take this trade. I can look for imbalance candles to take this trade. But in this scenario, because of this large move to the downside, right, we're going to pair now our premium discount that we were talking about for our ranges that are created. I'm going to be using premium discount for ranges, and I'll use them for either order blocks or institutional candle limits, which I don't play a lot, so I'm usually only using them just for ranges. But if I'm taking my high to the low of the entire move, right, that caused that breaker structure to the downside, now that I'm looking to take my trade to the downside as an institutional trader, because I now see that introduction of supply versus all of these longs that we're getting in trades right here, right? You can see all of this buildup of sell side liquidity, all of these equal lows that are being created of all of these traders that are believing this is a higher low, we're going up, right? This is what they believe. Market gives them a little bit of satisfaction, creates a distribution schematic, and then they get dumped on. And all their liquidity is gone. And they say, what happened? I thought market structure was king. I thought it worked. Why is it not working, right? Well, this is because of the introduction of supply, right? Liquidation rate. Now that we have taken shorts out of the market, we can introduce more shorts into the market. Algorithms had entered here. They want price to go down, right? And now we're looking to take trades based off of candles within that zone. So if I'm looking at a 4-hour zone, I can look to take the trade based off of this institutional candle if I want to refine it. All right, we're going to be looking at now the premium discount of this entire supply zone where I'm going to be looking to play it. Now, something I will let you guys know that with liquidation rates, this is where we're going to be finding our imbalance plays versus just regular market structure where we can enter our institutional candles. This is something I've noticed just within my experience and trading. With liquidation rates, we're going to be playing imbalances, and with market structure, it's going to be order blocks and that lower time frame confirmation as well. So you can still play the lower time frame confirmation, or you can play the imbalances for limits in this scenario. So what I was just talking about was going to be based off of limits. You can still play market structure based off of price action you see once this zone is reached, right? And you get that extra confirmation from these now displacement candles and breaker structures to the downside here to now play institutional candles here. So what this means is we have that introduction of supply here. If we're looking to take this trade yet, I wouldn't be. And the reason for this is because at the time of this trade, right, if we go into replay mode, if we're looking at psychology, right, we're looking at this as a higher low. We don't know what's happened yet. We don't know that it's going to go to the downside, right? We don't even know that supply was introduced quite yet. We have to get that final confirmation that supply was actually introduced, because this could be liquidation rate to the upside, liquidation rate to the downside, mitigation of demand here, and then continuation to the upside. We do not know. And that's the point of waiting and how that can allow us to be stress-free, because it's like we don't need to know. It's going to show us, right? Market's going to show us. It's going to show us its hand, and it's going to give us what we need to be able to trade these profitable trades. So now that supply, we believe supply is introduced here, we need to now have that confirmation. I'm going to be looking for a 1-hour breaker structure to the downside in this scenario. And the reason for this is because I believe it was our 12-hour swing. Yes, our 12-hour swing structure was bullish. But at this point, our 8-hour had a bear engulfing candle that had closed below this previous low that caused a new high here. Everyone can argue swing structure, but the reasoning for this is because if I'm looking at a 6-hour or a 4-hour, it's going to be these lows here. Low that caused a new high here. You can argue this is a low that caused a new high here, and then this is a low that caused a new high here. So as I was saying, we now need to confirm that that supply after that liquidation rate is supply. So we will wait for price to come into our zone and then get that final confirmation. Let me go back here actually. We'll put it at about right here, and we'll go on the hourly time frame. So now that I have this 4-hour breaker structure to the downside, what I believe is to be a breaker structure to the downside, now we need to confirm a lower high, a 4-hour lower high. How are we going to confirm the lower high? With now a 1-hour breaker structure to the downside after our point of interest is mitigated. So we're going to our 1 hour now. 1 hour is still bullish, low, high. Let's do it one more. Yeah, here we go. So now we receive that displacement, right? That first shows us that there's a possibility that we can take this trade to the downside. Why am I not looking to take this trade yet? Remember, because until this low is broken here, or this low now is broken right here, I don't believe this structure is bearish due to the 12-hour swing structure that I had shown before. So now we're waiting for now either this low to be breached or this low to be breached. That low becomes breached, right? We see our displacement candle. We now see our drop-based drop form, so our zone of redistribution. We see our imbalance creation here. Now we start to see, right, the buildup of shorts as well as we're coming here. So if we're looking to take sell positions in this scenario, right, we now have the supply introduction here, possible breaker structure to the downside here. We need a lower high. Lower high is created. Drop-based drop is created. This is going to be our zone of supply. We can look at take trades here. If we're looking at institutional candles based of our zone of supply in here. You have your last buy before sell candle here. If we're looking to play limits. Yeah, basically it's the candle that fakes you out. It's saying we're breaking out, and then the following candle just completely takes every trader out. It's the candle that says we're breaking down, and then the following candle just completely bullish angles. Could take stops here, targeting this low, right? This would still be technically a risky trade to me because our 30-minute swing structure is bullish, right? See how this plays out. We end up getting stopped out here. What happens, right? If we look to see what actually happens here, right? If we're looking to play limits in this scenario just based off of supply and demand, we were stopped out in this trade. But if we go on lower time frames and now analyze why we were stopped out, we can see all of these equal highs, all of these relative highs here. If we take away this supply zone right here, all of these highs right here, as well as an imbalance left behind right here, and a lower time frame drop-based drop, so a zone of redistribution and a zone of supply of right here as well. So if I'm taking my premium discount range for my entire swing high to swing low, remember I want to be selling in discount, buying a premium. I'm looking to sell on either this zone of supply right here, right, from the shop. This is our premium zone. Look, I could even refine this even more, and I've seen some traders actually do this to where they will refine now their top zones, and try to get either the 50% or some type of OTE within that. But our 50% in this zone is going to be our drop-based drop, our unmitigated supply zone, as well as our imbalances. So we could look to take trades off of this zone right here, or following market structure. And what this means is now that we have our confirmation, if we're looking to play limits, right, I'm going to be doing a lot of refinement, and I'm going to be looking to play these buy before sell candles, sell before buy candles that are fractal redistribution or reaccumulation on lower time frames. So you'll see this, right, as a buy before sell candle, displacement candle. But if we go to lower time frames, that was a 30-minute candle that I was showing you. It'll show you redistribution. So it'll show you the buildup of liquidity, liquidation rate to the upside, following by break structure downside. Yep. So a belief that we're going to the upside, right? Liquidation, which is just a liquidation rate, is getting longs in trades at the same time as taking out as shorts. And then the following break structure to the downside. This is your redistribution, right? Your accumulation to now distribution. Can look to take limits here, targeting the low with either above the supply zone, or you can look to play the even more confirmed trade, which is what I will show you right here. So this could be your first entry, right? Targeting the low, you end up getting a very nice trade, going in very nice profits, take profits at these lows here. This is something I will talk to you guys about, as well as take profits, how you can properly take profits with market structure and with these concepts. But we're looking at just how we can analyze this specific range and take trades off of this range that we were given, right? So in this scenario, we received this break of structure to the upside here, possible break of structure to the upside here. I start to see the buildup of sell side liquidity, right? We find our zone of supply, unmitigated supply, taps into that zone at the same time as taking out liquidity. So we can look to play our now imbalance within this zone of consolidation here. Our ICT setup, as we could call it. Right, liquidation rate to the upside. It's your, I believe you said 3 candles. If we go to 30, yeah, then we could show it. If we're looking at these market structure zones now here of supply that was created, right? So we have our liquidation rate to the upside. We're looking for the break of structure to the downside. Let me get this out of the way. Break of structure downside is given right here. So now this is a range. So you'll start to see that price is moving slower, but you notice that prices will be moving faster in your direction if you're on the right trend. So we look for the break of structure to the downside here. I can now confirm on the 15-minute. We get our break of these lows here. I'm looking at this entire move, right, that caused this break of structure. We have now this institutional candle here. So now after, go ahead. I think it was Suchi, you're going to say something. And then you can either target the lows, right, with take profits at these zones of demand here to take your intraday profits, right, and to get that RNO that you would like, right? This is a 10-to-1 in this scenario in this range, but you can use market structure to your advantage and catch these up and down moves within these ranges just based off of market structure. So if we play this out, now if I'm going on the higher time frames, because we are now in a bear structure, we have received internal break structure to the downside that I was talking about before. Received break downside here, right, that I was showing here, and then we received another break structure to the downside here. Now that we have introduction of supply here, introduction of supply here, break structure to the downside here, break structure to the downside here, I can now target my higher time frame lows, right, Because I assume this as a lower high, I assume this as a weak low. Strong high, high that caused a new low. Now that we have the introduction of supply following breaker structures to the downside, I'm considering this as a strong high and I'm considering this as a weak low. So I will look to enter positions now on lower time frames to target the higher time frame weak low. Price starts to play out. Believe actually this one came up one more time. Yes, this one came up one more time and ended up tapping or creating a distribution. Yep. Okay. So in this scenario, right, because we are playing our intraday and because we are entering our lower time frames, this is something I will always iterate when taking profits. You'll notice that I'll take profits at an intraday demand zone or an intraday supply zone before my higher time frame confirmation. So now that I've gotten all this confirmation, right, that I believe in this scenario, I get a distribution, I enter here, and I'm targeting these lows. I look to take profits here at this sell side liquidity that was created right here, right? All of these equal lows, this unmitigated demand zone right here that caused this move upside. So I can take my first profits at a 7-to-1 here. I end up getting stopped at break even. Price creates distribution, liquidates these traders to the upside from this now. Equal highs that were left here, fills imbalances up here, and then eventually moves to the downside. Go ahead and play this all the way out real quick. And then you get your final continuation. But if we're looking on our higher time frames, we can see now that this introduction of supply, right? We can look to take those lower time frame trades to the downside, targeting higher time frame profits. Sometimes they don't work out, and that's because we're in our ranges in this scenario. This move that caused this move to the upside could have possibly still been bullish if we would have broke this high, this strong high right here, and this strong high right here. The reason they are strong highs is because they cause new lows, right? High that caused the new low right here broke this previous low that had caused a previous high. So I'm looking to play supply zones here, looking to play supply zones here. Price ends up creating more liquidity right here, and this is something that I had noticed as price created this large displacement to the downside, started to create some accumulation, right? We saw our move to the upside. And this is where a lot of traders were faked out because they're all getting in longs here, believing that price is going to break to the upside, and we start to see that three drives distribution that you might see some of us mention on our charts. What it is just market maker psychology of three, which is you'll see three large moves in one direction to get the general public believing that price is moving a certain way before one or two candles to the downside that completely destroy the entire move. So you can see the one push, two push, three push, and then but we're not looking for the pattern in this scenario. What we're looking for is the buildup of sell side liquidity as we are reaching our zones and filling our imbalances. So, right, if we're looking on an hourly time frame here, right, we can see our zones of supply here, our zones of supply here, this displacement candle that was caused right here. So in this scenario, and the reason why I had missed it on this trade, and why I was too soon on this trade is because this bullish structure, right, this breaker structure to the upside still had maintained. We did not get that final confirmation, and that is why I had needed to target demand zones as my first take profit, and then be able to protect myself versus targeting those lows. Until we get that final breaker structure to the downside to be able to target those lows, right? So we get our range plays that way, targeting unmitigated demand, sell side liquidity, and that within those ranges. Let me get rid of this replay. And yeah, I'm about to go over kind of what I'm expecting next for ETH and Bitcoin. We'll look at a blank Bitcoin chart in a second and go over that. But just based off of what I have been teach you guys so far and kind of going over so far, I want to kind of importance that time is super, super, super important and super, super overlooked with everything, in my opinion, but with trading specifically. And the reason for this is as traders, we want to know the time that we want to be in the market. We want to know the time that we want to be out of the market. And something that is super, super important also is you want to know how much time you're in drawdown versus how much time you're in profits. And this is something just by knowing that is going to show you if you're doing things right. That'll show you exactly if you're doing things right and show you if you are getting in trades that are more confirmed, because price will be moving your way directly or very quickly versus you being in drawdown for 2-3 days because you took a limit order on a demand zone, right? It's very unconfirmed. You need those final confirmations. Drawdown is red. Time in red. Time that your trade is red. So think about this, right? If you're in a trade where you're looking to take in supply or demand zone, right? You're looking to take a limit and then you end up being in drawdown. This is just pure psychology, but you end up being in drawdown for a day or 2 days, and then you're in profits for 30, 40 minutes and you take it out because you're like, oh, I didn't want to do that. I'm sure some of us traders have done something similar like that before, to where we got stuck in a trade or felt like we were stuck in a trade, and then as soon as we were green or got some type of little profits, we took it out. Now you just wasted a day and a half waiting for this trade to go green for a little bit of profits. What this means is you just risked more than you made. Like, you're risking $10 to make $2 in this scenario, right? And your drawdown is in or your trade is in drawdown all for 2 days. You're waiting for 2 days to make $2, right? That's not something that us traders want to be, or scenarios that we want to be into. And I'm sure that it is a scenario that all of us traders have gotten into before. But yeah, is there any questions based off of what we're going to be looking for, based off of what I've given you guys just today? We're going to be getting really, really in depth, and I'm going to be showing you guys a lot more of these setups and how we can find these intraday almost every single day, how these setups are found on lower time frames, how you can use these to scalp, how you can use these to swing, how you can use these to play any type of trade per se. But yeah, go ahead and ask questions right now if you guys would like. In stream chat, I got stream chat open, and as well as the mics, you guys can go ahead and open those up. I'm going to give a quick ETH sentiment after I give like 5 minutes for questions, and then we'll wrap it up for the night. And I will record this as well. Go ahead and delete that. Yeah, 100%. So, what I'm going to be meaning about this is we're going to be utilizing session times when more volume and more money is going to be in the market versus when it's not going to be into the market, right? And how we can use this to our advantage to be able to trade at certain times and to be able to fit a lifestyle around our trades, to be able to make this a job. Yeah, I got you. Lev, Ben Cohen. Yeah. That's what I'm iterating as well. So what I mean by this is these sessions and this indicator. I'll give you guys this indicator as well if you would like this indicator. But the Tokyo, London, New York sessions, what this means is at certain times of the day, no matter where you are in the world, there is going to be more money in the market versus when there is not going to be more money in the market. And because of this, there's going to be more manipulation and more volatility at certain times of the day, and how we can use this for our advantage and to find setups. And so you guys see me, you guys might see me in chat posting like horizontal lines of like 8:30 every morning, and then you'll see those volatile moves following. And the reason for that is because at 8:30 a.m. is news drops every morning. ICT teaches this, as well as some other traders who are looking at session times, right? But something else too, I'll just give a quick example, is you're trading New York session, right? You take a short, your stop's going to be over this high, right? Targeting lows down here, whatever type of trade you're taking, you take a short up here, your session ends, you're done trading, you go to bed, right? Your stop loss is above this high. It's leaving liquidity the next day, right? For if we're moving a certain way one week, leaving highs up on certain sessions for that entire week, then I'll be looking for those highs and or lows to be manipulated the next week, so we can see possible reversals and or continuations. But yeah, this is something we'll get really, really deep into. But yeah, that's just kind of a basis of how I'm going to be using time. Yeah, 100%. But yeah, as well as just time and drawdown and time and profits. We want instant green trades, and we can get instant green trades if we follow these confirmation criteria and steps and risk management possibilities to get those maximum profitabilities. But yeah, as far as ETH goes, currently in this range. So I drew a weekly range for ETH a while back from our major low point that caused our major high point, and looked for a zone of demand and looked for liquidity within the range that I could possibly look to trade at our current price, due to the possible bullish structure that we still have on high time frames, right? What this means is probably the monthly or 2-month time frame could still technically be considered bullish, right? Up until 500, 600, 700 as far as ETH goes. So we could look to possibly take buys within this zone from this low that caused this high, right? But we need that final introduction of demand. So you'll see that tap into demand, and then you'll see the liquidation rate, and then the introduction of demand. So it's mitigation of the old, and then out with the old, and then in with the new, if that's making sense. But as far as ETH goes, I have demand zones around 1373 as well as 1616 that I still believe we could possibly mitigate just based off of structure right now. I would like a break up to our range of 27.78. I believe that was 37.67 I was looking for on Bitcoin specifically. As far as market structure goes, I still believe our daily structure is bearish until over this high here that had caused a new low. So I'm looking at the 2008-9 or 28.9 high, as well as the 2157 high for a full confirmed breakout. I will be possibly looking to take buys if we can receive lower time frame market structure confirmation to the upside. This one right here. So you're saying this structure point right here? This one? Um. Oh, right. So, to confirm our breaking structure, as I was saying, we still need our higher low in this scenario, followed by a new high to have our confirmed break of structure. So we can start to see, right? Because the reason for this is because it could be a liquidity rate, right? We could just be taking some shorts up here and then continue to the downside if we don't create a higher low. This one right here. Oh, right here. Yes, yes. So this is what I have as well. I have this one, and then I have this one internally. So the reason for this is the highest point, right? And this entire move that caused the lowest point. So you are correct. That's what I'm looking for as well for a complete breakout. I do believe if we can breach this high, then we'll breach this supply zone as well, as it didn't really violate any lows. It just came to fill imbalances. And we could possibly see a move back up into range highs of 27.7. But yes, you are correct. I will be looking for the 21.65 high to be broken for that full breakout. But yeah, as far as it goes, I mean, we're still really, really ranging. We just keep creating more ranges with these large propulsive drops to the downside. As far as upside, I do believe market structure is still bearish. We're starting to show signs of bullishness. I'm kind of just reiterating what my members pick said, but we do still have a lot of buy side liquidity as well as unmitigated supply for ETH around the 25 range that we created up here. Now, if we start to see bearish structure following after we mitigate this supply, I will look to take sells. And the reason I will look to take sells is because remember our higher time frame market structure is still bearish, so we need to be trading with the trend. And counter trend trades are going to be more confirmed, and they're going to we're going to need to risk less. So we got our supply zone that we're looking for, right? Our 25 supply zone that I was talking about. If we come mitigate that, then I can look to take possible sells into this demand zone here, and then we will look to see what happens following this, if we can create a higher low, or if we're going to continue to the downside, take out this weak low, and take this weekly liquidity to be able to introduce possibly a new trend. So nothing major as far as the trend goes right now. Any trades we'll be looking to trade will all be intraday. But if a large move is going to start up, we'll obviously be looking for some alts, some higher time frame setups to take some trades with as well. But that's kind of what I have for ETH. It's really not too much at all. Really not showing much right now due to this break of structure internally. Upside, right? This zone of we could call redistribution. This liquidity right here, the supply that was right here was broke upside. So we could create a higher low here, or continue to the downside, take this low and mitigate this demand. What I would look for in these scenarios on higher time frames is for breaks of recent highs and lows, right? And this will tell me kind of what direction is in the most recent trend. And so I can start to get a feeling and a following of price and how it's moving. But that is pretty much what I had for everybody today. I appreciate everybody's questions. I appreciate everybody in here trying to learn. It's really, really awesome day. are here and doing this. Like I said, we're gonna get into more. I'm gonna be posting this on Telegram. I'll post the link up in MPix after it gets uploaded as well. But yeah, let me know if you guys have any questions or anything like that. At me in Crypto Chat, you guys can DM me. However you guys can reach me. And I appreciate you guys again. Like I said, I'll upload this one more time. You guys have a great night, and I will catch y'all later.